business owners. From network troubleshooting to hardware repair or training, let Nerds to Go be your IT department. Call Nerds to Go today. We'll come to you. 425-800-NERD. That's 425-800-NERD.
All right, welcome back to the show, Tucker. And before we get into your segment, anything you want to add there about what you need to know before moving to Seattle?
No, I mean, I think the only thing you didn't hit there was probably our world-class outdoor activities, skiing, rafting, just surfing on the West Coast. I mean, just a ton of outdoor activities. Yeah,
definitely. I would say that if you are into anything that has to do with outdoors, we got it. Like you said, surfing. Yeah. Surfing is kind of, I wouldn't say it's new to me, but the fact that Westport, there's so many people that actually do surf over there, that's pretty killer. So
yeah, that mountain biking is super big. So
yeah. All right. So today's topic for our mortgage moment is on reverse mortgages. So let's just identify, what is a reverse mortgage?
It's an equity conversion mortgage, which is I think a better, more understood term. It's using the equity in the home to create the terms of the loan and essentially allow that equity to work for you, and in a net effect, kind of sell the home back to the bank.
Okay, so you're essentially selling the home back to the bank, yet you get to live in it?
Exactly. Yeah. The ownership position doesn't change. So no different than a forward mortgage, a typical mortgage. The owner, the individual that owns that home prior to doing a reverse mortgage, remains the owner of the home when doing a reverse mortgage. And what it does is it just allows flexibility for somebody to, if they want to preserve equity, they can make payments and kind of stay there. And as their appreciation goes up, they're going to preserve that equity. And so that myth of not preserving equity to pass on to heirs is truly a myth, that if they choose to make payments, and their equity is going to remain the same.
Okay. All right, good. So then can you buy a home with a reverse mortgage?
You can. And this is a really big topic right now, just with interest rates the way they are, rising house prices and property taxes. But you can. You can use a reverse mortgage to buy a home. It does require at least, typically 40% down or more. So a substantial down payment. But the major advantage is there aren't the typical credit score or income requirements that are necessary. So if you're on a fixed income in retirement, you can use those substantial assets to actually buy a home without us collecting pay stubs and your typical income documentation.
Okay, so it's just all about the equity. So buying a reverse mortgage is generally going to be fairly cash heavy purchase, yes?
Absolutely, 40% down or more.
40%. So what that means is somebody who has a ton of equity in their home, sells that home, turns around, buys something else, and instead of putting all of that equity back into that new home, they can actually just put 40% of that, so that they keep the liquid assets and invest that in Bitcoin, right? Just kidding. Don't do that. Do not take any, investment advice from me, a podcaster. But essentially have more liquid cash if they needed it.
Exactly. And that's really the true value. It puts the power back in their hands. It allows them to live a more free life, to do the things that they love, and not be cash strapped to a big mortgage payment and all the other things that come with homeownership.
Is it more expensive?
It can be perceived as more expensive. There are fees. It's backed by the Federal Housing Administration. So think more along the lines of a FHA mortgage. And so there's upfront mortgage insurance and things that are involved with the loan. And so it can be a little bit costly to start the reverse mortgage.
But one of the benefits there is it's not as because it's not as based on income. It's based on equity.
Exactly. And you're not required to make a payment.
Right. So you could make payments. Payments would go towards principal, or would they go towards interest, like a combination?
Combination. Yep.
Okay. So is it going to be mostly interest?
Your typical amortization. So it's going to be a balance between the two.
Okay. All right, cool. One of the things that I think folks can, because wrapping their heads around not paying something, right? I'm not paying something. That's kind of contrary to what they did for the last 20 years. Can they take their home away if they, in this scenario?
They can't. There's some protections in place to where we're not going to be able to use all of the equity. Typically the only way that they're going to take the home is if you decide to move out of the home. With a reverse mortgages, it has to be a primary residence and you have to maintain residency. So if you move out, and so kind of the example is, think of an aging person that moves into a nursing home. At that time, that the family has a certain amount of time that they do have to sell the home, or the bank can in essence start the foreclosure process. But they're always going to maintain some equity in the home to make sure that there's enough equity to cover the cost of transacting that sale of that home.
Gotcha. From a standpoint of, what's the word I was looking for stability purposes, why would somebody in this situation choose a conventional loan over this?
It's all about qualifications. So that individual that doesn't have income, is only on maybe Social Security and a small 401k or pension type income, to qualify for a forward mortgage or a typical mortgage, we're going to have to meet debt to income ratio standards. And given today's purchase prices with today's interest rates and property taxes, it's fairly difficult for somebody on a fixed income to qualify. And so it could be the difference of qualifying or not. But in an instance where that individual does qualify, we should weigh the pros and cons of both and help them make an informed decision that makes the best sense for them.
Awesome. All right. Well, Tucker, as always, great information. I think this is a very underutilized product that more and more people should take advantage of. There's no reason like why you should be spending money on a house or locking up all your equity, especially if you don't have to. I suspect that you probably have to get buy-in of other family members, because they're also kind of going, well, wait, I wanted this big lump sum of cash when we sold your house after you died, right? In some cases, there won't always be equity left over after they pass away, right?
Correct. And that's why with all reverse mortgages, it does require a counseling component to it. And so a third party counseling resource is going to talk to the individual, make sure that, one, there's no elder abuse here. We don't have a family member that's maybe forcing them into this, and really make sure that it makes sense for them and that they understand all of it. So that's what the really cool thing about this is, they're going to check into that and make sure that this is the right decision. They're making the decision on their own, and that they, in fact, are making the decision and they're not being coerced into making it.
Got it. All right. Well, Tucker, as always, you brought some great content. I really appreciate it. Thanks for coming on the show. All right. After this short commercial break, we are going to welcome in our good friend, Brandon Brockway-Ring. We're going to talk about roofs since it's raining out. So let's come back after this short commercial break.
The pest stops here. Green City Pest Control is your full-service pest solution for all your pest control needs. With an owner with 32 years experience, a board-certified entomologist, and rodent specialist, we do it all. Bats to rats, crawl space, or attic. Call us and we will resolve your problem. 425-413-9700.